Hi, I'm Phil Wilson with Realty Professionals of Texas. I'm sitting here with Scott Page of Victory Credit Solutions. And as a real estate professional, I get questions all the time from my clients about credit and credit repair. So I wanted to stop and ask Scott a few questions. I appreciate you.
Thanks for having
sitting
me,
down.
Phil. Appreciate it.
Great. Scott, first of all, how are credit scores calculated?
Well, there's 5 factors that make up your credit score. The most important thing and the biggest factor, it makes up 35% of your credit score, is your payment history, how you pay your bills. If you're slow, obviously it hurts your credit score. The important thing to realize about that, though, is 65% of your score is made up of other factors. So it doesn't mean you're necessarily going to be in horrible shape if you've had some slow pays. 30% of your credit score is made up of your outstanding balances. And primarily we're talking about revolving credit, which would be credit cards, department store cards, gas cards. Your goal, I'm really going to give you 3 goals. Your first goal is to be beneath 50% of the limit. Your next goal is to keep your balances 30% below the limit. And then to maximize your scores, you really want to keep your balances at 10% or less of the limit. So in other words, if you have a $5,000 limit, preferably you would not carry more than a $500 balance on that card. 15% of your score is made up of your credit history, the length of time you've had credit. Banks in the credit scoring system love to see that you've managed credit for a long period of time. That's why it's important not to close credit cards that you've had 10, 12 years.
Really?
It's helping your credit scores. Obviously a car loan, more often than not, they're 5 years. That account's going to close. But a credit card is something you could have for a very long time. The type of credit you have makes up 10% of your score. Banks want to see that you manage not only installment credit, which would be like car loans, home loans, but also your revolving credit. So you want to have both types. And then inquiries make up 10% of your score. It's important that you don't just let everybody check your credit and it looks like you're trying to get loans all the time and can have a negative impact. So when you're walking through the department store and they're offering you 10% off to open a credit line, it may not be worth it. Or if you're at the Ranger game and they're offering you a free hat, it may not be worth it because it is impacting your scores. Now there are also soft inquiries that will have no impact. A soft inquiry is when you check your own score, or maybe a insurance company checks your scores, or a potential employer checks your scores. Those are not going to have an impact on your score.
Well, speaking of checking your own score, how does a person check their own score?
There's 2 places I recommend. There's all kinds of websites out there, but I really recommend 2 different places. One, annualcreditreport.com. You're entitled to 1 free report from TransUnion, Experian, and Equifax every 12 months. It's free, doesn't cost you a dime. The disadvantage is it does not give you your scores, but it will give you your report. And so you can see if there's anything wrong on your report. If you want your scores, I recommend myfico.com, myfico.com. The advantage of that site is it's the same scoring system that banks look at when they're determining if you're approved for a loan. So the other sites, a lot of them aren't using FICO scores, and you'd want FICO scores. So again, myfico.com.
Very good. Now, once people get their credit scores, how do they know what a good score is?
Another good question. It depends on the type of loan you're trying to get. Believe it or not, a home loan is really easier to get right now than in a lot of cases a car loan, and certainly easier to get than a credit card right now. The reason being is many loans these days are insured by the government, either FHA, VA, USDA loans. What that means is the bank giving you the loan can be a lot more aggressive in the terms on the loan. That means lower credit scores, better interest rates, because they have a security blanket of the insurance from the government on that loan. So generally 620 is where they're starting at. 640 would be ideal. For a car loan, you really want to be 700 or higher to get the best interest rates. And then for a credit card, you want to be in that 700 range. 740 should be everybody's goal. Above 740 or higher, you're in great shape.
Very good. Now, besides being able to qualify for a loan, how can a good credit score benefit people?
Well, it really comes down to dollars and cents. We're going to show you a few slides here, and if you look at the first one, you can see this is on a home loan, and pay particular attention to the difference in monthly payment at the various credit scores and the various interest rates. And then as we show you the second slide, it's in terms of a car loan. And again, I recommend you take a long look at the difference you're paying in interest over the life of that loan at the various credit score levels. And then the final slide you're seeing is on your insurance. And it can cost you hundreds of dollars a year just on insurance in
Wow.
between homeowners and auto insurance at good credit versus bad credit. So the bottom line is a good credit score versus a bad credit score can literally cost you thousands and thousands of dollars a year.
Wow, that's a lot.
It's important stuff.
It is. Now, Scott, yeah, as we all know, bad things happen to good people. And many people lost their homes to foreclosure 2 to 3 years ago. And they soon may be considered eligible to reapply for a new mortgage. What do you suggest they do to prepare themselves to be qualified for that mortgage?
Absolutely. Preparation's the key. You always want to be ahead of the game. Right now, lenders are requiring 3 years since one of those major events, a foreclosure or a short sale, to requalify for a home loan. However, we are starting to see things loosen up in the marketplace, so I recommend you stay in touch with your realtor or your lender because those are subject to change. But that being said, I always recommend getting a jump start. Get the healing process started immediately. So at that 3-year window, you're ready to go. You don't have to wait 3 years and then go, oh, now I need to work on my credit scores. Get started during that 3-year window so when it closes, you're ready to go.
Great. Very good information. Okay, let's say somebody is ready to go ahead and get started and improve their credit. How quickly do you think they can improve their score?
Believe it or not, you'll see results very quickly.
Really?
Usually within 4 to 6 weeks, you're going to start seeing results. Now, of course, it really depends on where we're starting. If we're starting at a very low credit score and we have a longer way to go, of course, it's going to take a little longer.
Sure.
But in some cases, you'll see that the whole process will be done in 4 to 6 weeks. But call us for a free consultation. We're happy to go over it with you, give you a realistic time frame, and get realistic expectation on how quick things are going to change.
Very good. Now, this last question is something that, I've heard from many people, and I think it's one of the biggest things that people hesitate on when they start to get their credit fixed. How much should they expect to pay to improve their credit score?
Okay, yeah, it of course it's going to depend, and like anything else, you should shop. I mean, you don't go to the first car dealer. You probably check several, and I recommend the same thing. When you're looking into your credit, one, pick a reputable company. Make sure they are bonded. They're registered with the state. We generally see our clients are paying anywhere from $300 to $500 for an individual, and $500 to $750 for a couple. I would probably avoid the companies that are charging a monthly fee. It can drag out and really get expensive over a long period of time. So just food for thought, but in general, $500 to $750.
It's good. It's less than I used to think it would be.
And when you consider the amount of savings, you could potentially have a very good investment.
Absolutely, absolutely. Scott, if people have questions, how do they get a hold of you?
You can visit our website, find out all the information you want there. You can contact us through the website, victorycreditsolutions.com, or if you prefer to talk, call me on my office is 972-899-9990, extension 101. We're happy to talk to you.
Great. Scott, thanks for taking the time to
Thank
sit
you,
down with
Phil.
us. Very good. Thank you for watching the video. My name is Phil Wilson. I'm with Realty Professionals. If you have any questions about credit or credit repair, please call Scott. If you have any questions about real estate in the Dallas-Fort Worth area, please give me a call. I'll be happy to help you in any way I can. My number is 817-909-5999. Thanks for watching our video.